Hey, welcome to the 40 Finance channel, everybody. And it's time for a portfolio update here in August of 2022. I'll show you the stocks that I'm holding. And it's been a very, very busy month or so for me. You've probably noticed that my uploads have been sporadic at best on this channel, but hopefully now with the kids back in school, things will get a little easier. I've had a vacation in there. There's the whole back to school hoopla of getting people to and from all the places they need to go. And then I also had my oldest son got his driver's license this year, so we had to figure out vehicles and all of those things, which are not really stock related. They're more like family related, but they still came into play on my stock portfolio because there were some expensive items by the time you get through vacations and cars and everything else. So we'll talk about that as we go through here. Before we jump into my portfolio, though, I have some really exciting news from Seeking Alpha. They're having a mega special right now where you can get a full year of Seeking Alpha Premium for $99. This is pretty much the best price that I've seen since I've been promoting them and using them on this channel. So check out my link in the description. It is an exclusive discount for 40 Finance viewers. $99 for your first year, and it includes a free trial of, I think, 7 days on the front end. So you don't get charged right away. You can check out the platform. We're going to switch over to Seeking Alpha right now, but I did want to call out that special deal. Don't know how long it's going to last. I'm promised through the end of this month, and then from there, I have no idea. So we'll see how it goes. Okay, so here's my portfolio tracker within Seeking Alpha. This is connected directly to my Ally Invest account. Makes updates every single day on not only the price, obviously, of the stocks, but where I stand from a position basis. And we're going to go through the names here just because it's a little bit easier to view. Quite frankly, instead of looking at my Ally account, it's a little bit easier to view them here, and we can talk a little bit more about the analysis for each one. And then when we get to the end, I'll show you my sort of spreadsheet view that takes into account all the deposits and interests and all that crap to really get like a net gain or loss on the portfolio, which is never really easy to do when you have things like this total value right now, which stands at 65,000. It doesn't really tell you the whole tail underneath, and that's particularly true this month. So we'll look at that at the end. But for purposes of right now, I've sorted everything by the value of the stocks I hold, so their current value. So leading off the board here is QQQ, and this is under my holdings, so this is not year to date. This is the total percentage change of my shares worth of QQQ, and it takes into account obviously the dollar cost average across each one. See at the top here, we've got the shares column, so I have 52 of the Qs. I'm still bullish on the Qs, but it's a much longer term play. And so far, I have lost 8% on the Qs, and that's for the history of my entire account. So value at 17,156. Next up is PayPal. PayPal, I have 125 shares. PayPal's been a dog. It's starting to claw its way back, if you will. I'm at 168, so I'm down 41% on PayPal. Next, we go to Zillow, 200 shares at 67, minus 46%, so sad face on that. TQQQ, which I talk about a lot, that's the leverage version of QQQ, which I will be adding here now that I'm kind of getting my finances back on track. But I've got 160 shares. $43 is the average cost for them. I'm down 12% right now, but this was a much lower number. Excuse me, what is it at today? You can't really see that in this view, so I'm going to scroll over. TQQ today, 37.80. I didn't cover the other ones, but you can see them up here. So 37.80, I'm at $43. That's how you get the minus 12%. And this one's been even much lower than that. Same with QQQ. That's been in the $300 range many times this year. So I'm trying to pick off some shares and lower my cost basis there. DraftKings, Again, it's been a miserable year to date story for DraftKings. However, it has bounced back here recently, and football season's coming up, so that's good news. 1957 is the current price. I paid $33.11. I'm down 40%. All right, let me get these other ones into view here. You've got Rocket Mortgage. Doesn't really feel like it's going to be a banner year for Rocket or Zillow, and perhaps next year might be a little lame as well until mortgage rates stabilize and people get used to the price of houses. 1040 is the price of Rocket right now. I paid $18.24. I'm down 43% on that one. Magnite is stuck in the middle of a big changing environment in streaming. They are doing good things. They have hit their earnings number, or they're within expectations. Unfortunately, though, my cost basis on this one far too high at 20, and I'm down 53%. Then you have Square, and with Square, I haven't bought a share of Square in a long time. For me, it's really just a hedge on my PayPal bet, which I believe in much more strongly in PayPal. But Square is here. $79.88 is the current price. I'm at $217. It's going to take a while, say the least, minus 63%. The one thing I'll throw in about Square and perhaps PayPal to some degree, Bitcoin's obviously been hammered. If you were to see a resurrection in Bitcoin prices, that would likely drive Square up considerably when you factor in that they hold that on their balance sheet. Palantir, $9.25. This is another bust. I'm in at 20, and I'm down 54%. Then we have KWeb, which is a conglomeration or an ETF of Chinese internet stocks. They can't catch any good news. And to be fair, the economy in China is looking like it might get worse before it gets better, perhaps just like America. I'm only in at 30. I only have 80 shares, but I am still down 9%. This would definitely be one where if it got over my cost basis into, let's just say $31, $32, I may end up chopping it and trying to sell it for cost, if you will, so that I can redeploy into some of these other names that I'm a little bit more bullish on. Sabre, related to the travel industry, it's sort of a reservation software, $7.65. I don't know what to say why travel can't seem to catch a break in the stock market, but I don't see travel problems in terms of revenue. There's plenty of travel problems out there, but Sabre's doing good things. They're getting right back on track, and I think the future is bright once it catches up to their accounting spreadsheets. Fortunately for me, $11 is my cost basis. I'm down 30%. Sabre would be one that I would think about if it got, just like KWeb, if it got back to par or something, I have to consider chopping it maybe in order to roll it into more shares of Q or TQs or something else that I believe in a little bit more. So those are the individual names. And if we just take Seeking Alpha's sort of quant formula and Seeking Alpha authors and Wall Street analysts for what they are, right? We just make the assumption that their opinions are educated. Doesn't mean that they'll be right, but they're at least educated. When you look at the Quant Score, I have TQs. Well, first I have regular Qs, TQs, Sabre as green, which is positive, particularly in terms of momentum. KWeb and Magnite are coming in red on the Quant Score. And then, basically hold for these other ones down here. PayPal, Zillow, Square, Palantir, DraftKings, and Rocket. On the Wall Street side, though, there's really no sells out of this bunch at their current price. And that's important to keep in mind when people are talking about selling, or they issue a sell rating on a stock. They're saying get out now because it's going to get worse. And outside of KWeb and Magnite on the quant formula, there's not a lot of other sells. So I'm expecting to, hold pat on a lot of these names, except for my very small positions that we just discussed with KWeb and Sabre. I'm not sure what I'm going to do with those. You're probably noticing a missing piece here, right? And that missing piece is Visa stock. And that is because I have sold my Visa stock. And with Visa, I had 65 shares of Visa stock, and I wrote this down here, and I sold it at about $216, so I got $14,000 out of it. My cost basis was $190, so I think all in all, I didn't quite make $2,000 on holding Visa. However, they did issue some dividends across the time I owned it. And I still like Visa as a company. Here we see the year to date. And I think that they're under appreciated in the sense of how much more revenue they're going to bring in just by having international travel back. But it has just been a real battle with Visa in the headlines over the past 60 days because you have, Congress coming after them on their fee structure. You just got a lot of negative energy around Visa right now. They had the scandal with the online site for mature audiences. So that stuff was coming up. So I just feel like everywhere Visa turns, they just have attacker after attacker. So I was up slightly from 190 average cost per share. I saw it pop to 216 last week or the week before, I can't remember. And I was down a little bit on my finances. So I was like, you know what? It has been so brutal over here in this portfolio. It has been so brutal. I've got a small win with Visa and I'm going to take it. So that was really the rationale behind selling Visa. Okay, so now let's go into spreadsheet mode where I actually take all the little individual transactions from the account and organize them better so you can see exactly what is going on, because just the value of your account doesn't really tell you how much money you've made or lost over time. So I'll leave this off. Hopefully, let me try to zoom this in a little bit more. Let's go view, zoom. Think that hopefully that will be better on the screen. But we are in 2022. I started the year on Jan 1 at 102,247. Obviously, the market has had several dips since then. Withdrawals, we talked about the family expenses, the vacation, the used car for my son, some of the other stuff that was going on in the house. And I did a video on this. I did decide to take a margin loan, short-term margin loan. I knew I was going to pay it back, and that was for $20,000, and it allowed me to basically pay cash, so to speak, for a used car, pay cash for vacations, all those things. Obviously, it robbed of future potential, right? But given the economic uncertainty, given where my stock portfolio was, I really felt like it was worth the opportunity outside of, selling stocks that were down in mega loser land at a time when the market was really low. That didn't seem to make any sense. I didn't want to lock in those horrible, horrible numbers that we saw. So I took the margin loan. You can see that I paid interest. It was only out of my account for roughly 60 days, 90 days, something. I don't know. But that interest that I paid for using that money was $236. So we have 102 minus 20 minus 236. These are my deposits for the entire year. Okay, so just shy of 13,000 is the money that I've put back in. So if you balance deposits and withdrawals, I'm obviously down just call it minus $7,000 plus the interest. I've gotten $582 in dividends, and on the realized gains and losses, 4,335. So that includes the Visa sale. This year, I've also taken small wins in Taiwan Semiconductor and TJ Maxx as well. So during this time of uncertainty, I've taken 3 stocks that I was still in the positive on and luckily sold them in positive territory because a lot of them, TSM in particular, have tanked significantly since then. So I've locked in $4,000 in gains, which I'll take in this horrible year. So I have a ton of losses sitting in the account. And I have managed to balance my, family expenses in an orderly way without having to go into credit card land or loan land, stuff like that for used cars. This rebates column for $11, that is money that Ally gives me each month. It's only like a couple dollars each month because they borrow my shares, probably for options traders who do that. So if you added all these things together, the total, if I was break even, should be $99,600, right? That's where it should be. However, the value of stocks, of course, change in the market. So today's account balance is $65,000. And we went back to, that kind of gets added up here on these big L's that I have, right? So down almost $34,000. So from the start of the year here to right now, I am down 33% or $33,000, $34,000, however you want to look at it. That's where the portfolio stands now. Now, this is my retail account or taxable account, a lot of people call it. It hasn't done very well to serve as a savings account this year, but that's kind of what it is, right? For me, I do have emergency savings. In fact, some of this money that I took out on the withdrawal went to buffer up some savings because I knew we were having, economic hard times, and I just didn't know which way that coin was going to flip, and I still don't know exactly which way that coin's going to flip. So it just gives me a cushion. But now I'm all paid up on my withdrawals and my interest. So I'm starting to grind back towards that time when I'm going to be making more deposits in the account and buying more stocks. I'm a little nervous in today's market because things have went back up. That's what's surprising about Visa. And one of the reasons that I sold it was I'm surprised this little bump in the market. So it's really helped out my Qs. It's really helped out my TQs, and it's helped out Visa, brought me into a green, into a good position to sell. And then also things that were just getting clobbered, whether it was DraftKings, PayPal, you name it, I'm still getting clobbered. But I'm not down 60% or whatever it was, say, back in June when things were really lying low. So that's where I'm at today, 65,000. I've got a lot of grind going on behind the scenes. So this is a busy time of year for some of the business ventures that I work in. So for me, I'm just going nose to the grindstone, accumulating cash and buying some shares here. But I do think that we will have opportunities as we head into the end of the year where I would imagine the market is going to, dip again. I don't know how long it will last. But these fears just don't seem to go away, and they certainly don't go away fast enough. Wouldn't surprise me if we continue to see an uptick through and maybe shortly after Labor Day. But I think that next earnings reports, and we saw how mixed they were this time around, I think the next set of earnings reports, I don't want to use the word disappointing in the sense that stocks are going to miss completely, right? But my vibe of this last earnings season has been people are beating, right? The Googles and AMDs and whatever, they're beating or they're getting darn near close to their numbers. The percentage amount that they're beating their earnings by continues to drop each quarter. And it doesn't give me a real positive feeling heading into like a January. But we'll have to see. I'm not selling out of the market, but I will be looking at opportunities to book gains. And then at the end of the year, come around December, I'll have some decisions to make because I have that $4,000 in realized gain loss Okay, so that's obviously taxable. I'm in a taxable account. So I will have to think of my opportunities to potentially sell off losers, try to match that number and avoid taxes. So I've got some work to do. I'm sure I'm not the only one out there, but hope you guys enjoyed this update. Before you go, don't forget to grab that Seeking Alpha special offer that's in the description. Again, I don't know how long it's going to last, but it's $99 for a whole year of Seeking Alpha. I'm not good at math, but that's less than $10 a month. You're just not going to see a price like that. I'm honestly surprised that they're even running that type of deal. Thanks as always for watching. We'll see you on the next video.